You're listening to The R.E.A.L Show with Kathy Fettke, the real estate investor's resource.
Good afternoon. I'm Kathy Fettke, co-CEO and co-founder of Real Wealth Network. And wow, we had a tremendous response to today's topic. So I'm guessing there's a lot of people that want rental income and the security of having their money tied to real estate and the tax benefits, but not having to actually do the work. That's a pretty good combination. So we're really excited to share with you how you can do that. And there's a lot of funds out there. Basically, when you hear the word hedge fund in real estate and all these hedge funds buying real estate, that's what we're talking about. So just because a fund is a hedge fund doesn't mean it's on Wall Street. There's lots of people out there who start funds and maybe telling you about them. So we wanted to go over what you should be looking for, because there's a lot of differences. Every fund is basically different. So we're going to go over what you should look for when being presented with that opportunity. So again, this is our disclaimer that we want to make sure you understand that everybody has a different situation. So anything we present to you, especially if there's any tax-related advice, it is not advice. It is information and questions that you should be bringing to your accountant and your advisor so that you can get the right information for your specific situation. And I'm telling you, everybody has such a unique situation that you really, really never want to make any financial transaction, certainly no real estate purchase, before speaking with your accountant. And of course, past performance is no guarantee of future results. We do the best we can to predict the future, but I don't have that perfect crystal ball yet. We're working on it. Okay, so today's agenda, we're going to be comparing the pros and cons of investing in a real estate fund where you don't do anything. You just have someone else managing it for you, but you still get the cash flow, the tax benefits, and appreciation versus investing on your own. And then we're going to compare the steps needed to get started either way, and maybe both. There's certainly a lot of people that will choose both because there's really good reasons for doing that. And then we'll delve deeper into the different types of funds that are there, what to look for in the offering documents and the PPM. And if there's no PPM or offering documents and someone says, hey, just give your money to me and I'll invest it, that is a red flag. Don't do it. So you want to make sure you understand how to read the documents. And then we'll have some time for a Q&A. So with me today is our team. I'm so proud to introduce to you, though I'm sure most of you know who Tim Horvath is. He has been in charge of finding us these fantastic turnkey providers across the country. He worked for 2 turnkey providers before we snagged him. And so he really knows the inner workings of how turnkey income properties work and how turnkey companies work. So he knows how to vet them. And he has just been bringing, great teams on board and letting some teams go that maybe don't fit our new standards, which he developed, which are called the R.E.A.L turnkey standards. There's a lot of turnkey rental companies out there, but there's been no definition for what turnkey meant. So some people maybe put some new carpet in and put a tenant in and called that turnkey, and that certainly didn't meet our standards. So Tim developed R.E.A.L turnkey standards, and very proud that he got to share that at a hedge fund conference last week in Miami on the stage with a bunch of hotshots. And we got to, talk about how we've, defined what turnkey means. And Adam Whitmire was also there, also on stage at that hedge fund conference in Miami. And he is here with us as a consultant and working with us to, he's had several funds. So we wanted him here today. He's been coaching Tim, and we wanted him here today to walk us through what to look for in a fund. So welcome both Tim and Adam.
Thank you, Kathy.
Kathy, thank you very much.
You're welcome. So we'll just start with what is a fund and how does it work?
So Kathy, I think sometimes the easiest way to explain it or to understand it is if you think of it like a mutual fund. When people invest in the market in their IRA or their 401k, sometimes money will go into mutual funds, which is it's basically a company where a number of investors contribute the money and they mutually fund an investment. And in this case, we're talking about real estate. So it is, it's like you said, an entity or an LLC where a number of investors put money in, It typically has a professional money manager. There's typically some regulation that goes along with it. But that fund, every fund has an investment objective. And the investment objectives are a little bit different. And we're going to talk a little bit about that today. But that's basically the gist and the concept. It's just a mutually funded investment entity.
Thank you. And so we'll go on. Yeah, we'll go on to talk about how it works. And first, we're going to talk about the benefits of owning real estate, not in a fund, just for you. Like, let's say you're going to buy a turnkey rental property or some kind of income property. We've talked about this a lot at Real Wealth Network. What are the benefits of investing in buy and hold rental property? And for sure, we know that there are tremendous tax benefits. You can have depreciation. I won't go into too much because in our real estate or our Real Wealth Investor Academy, we have module after module after module given by top CPAs to teach you about the tax benefits from real estate. But let's just say that owning income property is a wonderful thing to reduce your taxes. You can pretty much write off most of your expenses in regards to that investment property. Again, speak with your CPA or sign up for the Real Wealth Investor Academy, which you can do on our website for a whopping $10 a month, and you can get access to those modules with these top CPAs. I'm sure meeting with them one-on-one would be more like $200 or $300 an hour, but $10, not a bad deal. Anything you guys want to add to that part of it?
No, I think, Kathy, I think you nailed it. Some of probably the two biggest tax benefits people look at are the depreciation, and if you're using financing, the interest deductions. Those really make a big difference. On the depreciation side, you could have a high income tax rate, and you can depreciate a big portion of your income or write it off on the property, and then when it comes around on the back end, you only have to pay those income taxes on a much lower tax rate, similar to capital gains. So so basically your effective tax rate goes from what it currently might be, and it just drops based on when you go to sell the property. So that's some of the biggest benefits for investing in real estate.
And again, always speak with your CPA. We are not CPAs. Adam is not, but we've been real estate investors.
Correct.
Yeah, we've been real estate investors for a long time.
This is what my CPA tells me. That's right.
Exactly. Yeah. So talk to them, but tremendous write-offs when you own property. And that's why so many people want to. And lots of people say, well, I want to buy my primary residence so I can get tax deductions. Can you get those same deductions with rental property? And I'd usually just laugh a little and say, oh my goodness, you get far, far more benefit having investment property versus.
Absolutely.
Yeah. So next is the control and flexibility of owning property. Do you want to talk about that?
So yeah, I think one of the biggest benefits is often when you look at a monthly statement on your retirement plan from your 401k or IRA, often sometimes you're excited and sometimes you're very, very depressed. So you don't have the same control as you do in real estate. In real estate, you can see the asset, it's there, and often a lot of investors invest nearby and on things where they can see it and they have more control over it. There's flexibility. So basically you're in charge of it, and nobody manages your money better than you do. And I had a stint in the asset management world and in the financial planning world, and I understand how that is, but really nobody really does manage your money better than you do. And so if you can get in a situation where you've got vested interest, or you're partnered with someone and they've got vested interest, then that's a great scenario. But you do have a lot more control and flexibility.
Yeah, if you own your own portfolio of rental property, you decide when you're going to sell, you decide when you're going to refi, you decide where and what you're going to buy. So it's that kind of control and flexibility that that people love versus investing in the stock market where you really have no control at all.
Absolutely.
And then you get all the profit. That is kind of fantastic.
Yeah, it is. That's the best part. That's the part that we all look for. You get all the profit. And again, that all goes back to the control and flexibility. And oftentimes, again, and it's not listed here, but one of the biggest benefits in my mind is you've got a hard asset. If you own a a business or a company and the company goes under, you don't have anything, but if you have the real estate, you have something. Or if you invest in the market, you're investing in a company. I know investors had situations where they invested in a business, but when the business went under, they still had the real estate and the asset. And so there's a lot of benefit if you structure it and if you do it properly.
Mm-hmm. Absolutely. All right. So I'm sure most of our listeners already know all of that, but let's talk about the difference and the different kinds of benefits of investing in a fund that is secured to real estate.
Yeah, this is the fun part. Here's where it gets a little bit interesting. Some of the benefits of investing in a real estate fund, like we talked about before, are similar to benefits that you get when you're investing into a mutual fund. And one of those benefits is diversification. You often, when we get started or we're building our portfolio or our nest egg, we don't often start with several $1 million that we can go out and we can have true diversification by purchasing different type of assets in different markets or being able to utilize a strategy similar to that. So we typically have enough to buy one house or 5 houses or wherever we're at on building that portfolio, but when you invest and you own shares in a pool of properties that has an investment strategy, and that pool of properties could be in several different markets. It could be different types of asset classes of properties. And so there's real and true diversification when you're investing in a fund in that way. The second thing, which is probably one of the biggest, is there's a professional money manager, or excuse me, a professional management, just like a professional money manager in a mutual fund, that's for the real estate. So you've got someone, and this is really especially important if you're just getting started in real estate or if you have a limited background in real estate, because you've got someone that ideally has a long and strong background in real estate investing and has made a lot of profits in real estate investing and understands investment strategies, understands the analysis, knows how to do sensitivity tests and partition incomes and all those different things that are important investing on that larger scale. Your money manager typically has a background in that and can help you put together a solid strategy. And in a lot of cases in real estate funds, money managers' interests are aligned with the investor's interest because they make money depending on how well the fund performs. And if the fund doesn't perform very well, they don't make money, or they don't make much at all. So,
and I want to jump in there and say it depends. It depends, because when you invest in mutual funds or in the traditional stocks and bonds, what has always confounded me, and I don't know why the masses agree to this, it's a terrible deal. It's a terrible deal. If you make money, the manager, gets their fee. If you lose money, the manager gets their fee, and so it's ridiculous. And people sit there and pay these managers whether they do a good job or not. So that same deal can happen in a fund where a certain manager is maybe getting paid first. And so you have to know how to read. Obviously, there's going to be fees for actual management of the properties and finding the properties and buying and selling and so forth. But there's not somebody just sitting there collecting fees whether you're making money or not. So it's just really important. That's why you want to make sure, we're going to go over the details of what you need to be aware of to make sure that you all either make money, or if there's no money, nobody makes money, right? You've got to have the incentive that the managers do well.
Absolutely. Kathy, that's a really good point. You mentioned earlier about a PPM, and everyone may or may not know what that is, but you have to read those details, and you want to make sure that your interests are aligned a little bit. And hopefully, if the manager doesn't perform well over time, there's an option to get rid of the manager and get a new manager. So you want to, Kathy, that's a really good point. You want to make sure, really know what it is, understand what it is that you're investing in, be able to read through and understand what those terms mean. So another one is having a preferred return, which basically means you get paid first. Kathy, touched on that a little bit about, asset managers and people collecting fees first, but ultimately in a real estate fund, often they will spin off what's called a preferred return, which basically means that the investor gets paid first. And if it's a cash flow fund, the investor will get paid throughout the life of the cash flow first. and then the operator or sponsor, whoever's running the fund, doesn't get paid until they reach that hurdle. So basically, if they haven't reached the hurdle or just barely reaching the hurdle, all that cash flow is going to the investor. And so the fund manager has to work very hard to make sure they can exceed that hurdle so that the fund manager can get paid as well. So that's a great benefit that kind of puts your needs first, I think. And you know, not also another one, not needing to qualify for financing. And Kathy, you can touch point on any of these you want to, but I just want to mention a couple of points about that. That, in my opinion, is probably one of the most important. And it's not just being able to qualify for financing, but it also touches on it being able to access better capital. You know, as everyone knows in real estate, one of the benefits of investing in real estate is leverage, which means you can have something called positive leverage. Positive leverage is when the interest that you're paying is less than the internal rate of return on the investment that you're investing in. So what happens is you get to make money on that spread as well, so you can see when you look at leverage returns as opposed to a regular cash on cash return or cap rate, that those leverage returns often be a lot higher, and it's because of the benefits of positive leverage. And so you want to get the very best access to the very best capital. You don't want to go into a fund scenario like this and be paying like like really high interest rates that hard money lenders are notorious for charging, and a lot of groups are. So that one's really important. And Kathy, again, we touched base on some of the tax benefits. I'll tell you the tax benefits that Kathy mentioned before and that we talked about before are similar. So these entities are usually pass-through entities, so a lot of those tax benefits will pass on to the investor. Now, the difference is, in this case, we're going to talk about it's a passive investment. And again, we're not CPAs, but you can go online or talk to your CPA, and there's a few requirements you have to be an active investor, but which basically is not related to investing in a fund, because it's going to be a passive investment, but you can take that passive gain or loss and you can put it against any other type of passive income that you have. But those tax benefits come through to you.
Wonderful.
Just a reminder real quick, if anybody has any questions, you can type it into the box on the webinar, and we will answer those as we go or at the end.
Fantastic.
Great. Thank you, Tim. So Kathy, did you have any other points you want to talk about financing or preferred returns?
Just that the preferred return is there's sometimes, if you're new to investing, you might not know what that means. It just, again, I know Adam explained it, but it means you get paid first. You have preference. So that's a really important term that you want to see in any documents. The fact that you don't have to finance, that the fund is what gets financing, that's really helpful for people who have maxed out their financing or maybe don't have great credit, but they have money. So there's lots of pros and cons. Yeah. And
Kathy, I don't think did we talk in here about one of the most important aspects of investing in a fund is that you don't have to do the work? I know we came in with that.
Webinar. Yeah. Right. Someone is, well, you did professional management. Someone is doing it for you. Right. And what's great about that, one of the reasons that we are so excited about having our own fund is, which is we're launching in about a week, is that so many times we have new investors who are busy, they're working people, and they don't have the time to really understand investments or get out to the markets and look at the property and go through the process of even buying a turnkey property. Turnkey's pretty turnkey, but there's still work that needs to be done, and not everybody has the time, but they want their money out of the stock market. They want it secured into a hard asset, but just can't do that. So to have somebody else do that is such a benefit. Now for us, it's a benefit too, because we'll know when we know a good deal when we see it. I mean, Tim just went out and looked at 4 unbelievable deals that would sell. By the time we got to you guys and told you about these great deals, they'd be gone. And that's frustrating because he comes back from a market and, wants to tie these properties up. But by the time a new investor comes and, looks at it and kicks the tires and doesn't really know what to ask for, well, the providers are just going to sell it to someone who can move faster. And so right now, the biggest issue we have in the US when it comes to property is there's just not enough of it. Everybody is clamoring for property. Now we have inside relationships with people who know how to find deals, and they work really hard to find those deals. Our turnkey providers are so in demand right now because they have creative ways of finding properties and getting them fixed up. They have teams in place, and so there's a wait list. But if we as a network can come in and buy them first because we know what to look for and we're not going to take long, well, that's going to be better for everybody. That's part of what's great about the professional management. And then, the same goes for the tax benefits. A lot of individual investors don't have time to deal with that, or maybe you don't have time to go to our academy and learn all about taxes. You just want it done. And we understand that. So I think we've grown and grown with a network of people who are busy and they've got great jobs. They just don't want their money in the stock market. And that's why we want to make it a little bit easier.
Yeah, Kathy, sorry, Adam, but Kathy, to your point, yeah, I've been lucky enough over the last 2 years to be able to travel and see all the different markets and see what's going on. So I can quickly, when I see something that makes sense, I can quickly analyze it to Kathy's point. And this way I can swoop it up, put it in the fund. Time we have them come out, do an event, a lot of times those properties are gone.
Yep.
No, that's a good point. And to that point, when you're trying to get the very best deals, buying power helps. It helps to be able to buy a lot of deals, and often providers of properties and people that are and sellers, they like that you can come in and you can buy a lot of volume, and you can negotiate better terms, you can negotiate better fees and better rates, and you can just pick up, you can get better deals that way because it's a constant flow. And a lot of times your affiliates or providers make money on volume, and so that's a good
now,
point.
Adam, I didn't say this about you in your intro, but you were a provider for hedge funds in the past, correct? Did I get that right?
Yes, that is correct. That is
Yes.
correct. I was a provider for a number of different hedge funds, maybe like 15 or 16. I was the official acquisition. It was a broker acquisition arm really for 8 of some of the largest hedge funds. And when we started jumping into the market aggressively in 2010, there was a lot of great deals, and a lot of the hedge funds started getting aggressive later that year and toward the end in 2011. But so I basically sourced, I guess, close to 1,000 properties to hedge funds. And it was basically, they just had a lot of money. It was really a grab fest at the time. They had a lot of money. They didn't have much of a strategy at the time because this was, to them, these single family homes was a relatively new asset class. They would fly into market, and I would basically drive them around, show them the product, and then help them come up with an acquisition strategy. I did that in Georgia and Florida, and mostly in the Southeast. But yeah, they were all different. They all had different investment objectives and different strategies. And so I got to see firsthand the whole institutional level, and that's what I've been doing for the last number of years, helping hedge funds know what markets to buy in, what type of product in that market to buy, in essence, which product has the best value, not necessarily which ones are the cheapest price. I remember when equity group out of Arizona came and flew over, and they said, well, this is what we want to buy. And I told them, I said, I don't think that's what you want to buy. They said, no, we want this. This is where we get the highest returns. And then when I drove them around and showed them the product, and the product looked so cheap, and it really wasn't, and I said, look, now take a look at this product. You're going to get a little bit less of a yield, but look how much better, more product you get, how much better looking product and better neighborhoods. You're going to have more appreciation over time with a very similar cash flow. And so things like that, those were the conversations we had. And we had a way of analyzing homes and properties in a market very quickly using some purchasing algorithms. And we were able to pretty much tell exactly which homes on the market at the time would hit those cap rates and which ones wouldn't. And so they got really excited about that. And so I ended up doing a lot of sourcing and acquisitions for hedge funds through that process, and still do today on a different level. Now it's mostly portfolios. Wonderful. Now we get to talk about the process and the steps of buying turnkey real estate.
And I think we can go through this
Kathy,
part pretty quickly because I think most people know
yeah,
that.
yeah, no, this is pretty common, and you guys can jump in whenever you want. Kathy, did you want to cover this part, and I'll cover the next?
Oh, yeah, sure. I mean, the steps to buying turnkey real estate through us. First of all, we research the different markets and find out which markets have the job growth, population growth, desirability, affordability being the most important. Well, not the most important. Job growth most important, then population growth and affordability. And then we love to be in cities that are also spending a lot of money on their own revitalization. So we research the markets, and then in those markets, we find property providers who are actually investors themselves. So they really understand the rental market. They know how to renovate properties, and they know which management companies are the best or they just have their own. And so we do that at Real Wealth Network. We do that research and give it to you so that that will help with your research. If you're not working with turnkey property providers through us, then of course you need to do that part of it, the part that we've started for you, and really research who you're dealing with. I cannot tell you how hard that is to do on your own. We have Tim, who's a professional. Tim, you wanted to say a word or two about how much fun that is to sift through who's the real deal and who's not?
Yeah, crazy thing though is I enjoy it. I've seen the real and I've seen the fake, and I pretty quickly can tell the difference.
Yeah, and you have to stay on top of them because sometimes good goes bad. So
Absolutely.
takes a lot of work. Anyway, whether you're doing it through a network or through on your own, you need to do your due diligence on the team and the market for sure. You need to get financing lined up unless you're paying cash, and get approved with a lender before I would say looking for property. You want to know what you can buy and if you can qualify. Or if you're going to use your self-directed IRA to understand how that works, or if you're going to pull money out of the stock market, understand how that works. So speaking with your CPA should be on there too, just making sure you're all set up and you know what you're doing and what you should be finding. And then the fun part is finding the property. It's like buying a little puppy, and then you have a puppy you have to take care of. So you want, finding the properties is usually the part everybody loves. And of course, getting your offer approved. That is a challenge these days because everybody's chasing real estate because it seems to be the last remaining safe haven for worldwide. Everybody from all over the world is trying to buy U.S. property right now. So getting the deal sealed up is the challenge. Once you have that, then you, of course, absolutely don't get caught up in the frenzy, because even though property is hard to come by these days, don't jump into something just because it's the only one you could get. Always get your inspections and your appraisals and your homeowner's insurance. Get that lined up. And then once you do all that and you end up closing on the property, then you want to this would be beforehand. You'd want to interview the property manager, make sure you've got someone great in place that can verify that the property you're buying would have rental demand, and kind of get an idea of what kind of rental demand is in that area and what kind of rents people are getting, other owners are getting. And then you want to always stay on top of your property manager. I will tell you, and maybe Tim, if you want to add anything quickly, but if you notice any sign of any unusual activity with your property manager, you want to be on top of that right away, and not let them go 1 month without paying you, or 1 week really. So you just have to be on top of that. Tim, is there anything you would add to that?
No, you're exactly right, Kathy. That is the most important part of this whole thing is you have to manage the managers of your property managers. But when you think you have it figured out and they're the best thing since sliced bread, then that's when it gets you in trouble. So yeah, that is definitely something you have to pay attention to. And as soon as things aren't going the right direction, you have to jump on it and make sure you're staying on top of that.
I think from here, Tim, we're probably, as a network, going to put more controls in place in the future, because, one thing I've been asking for is I want regular audits. Now, we don't, as a network, you and we're not allowed to go to a property manager and say, we want to audit you because, unless I own property and that property manager manages it, I don't have the right to ask for an audit. But what can people do, Tim, if they have suspicion? Can they ask for an audit in the research you've done?
Yes, if they own the property, then they are able to ask for the bank accounts to make sure that their escrow is where it's supposed to be. The issue that, like exactly you said, Kathy, when I try to do it without having a power of attorney or owning the property myself, I'm legally not allowed to see that unless it's in the contract from the beginning. And that's something we are working on as I bring on new affiliates to try to get that power from the beginning, so I can audit them.
Yeah, because nobody knows that there's any problem until somebody isn't getting paid. And so if you're not getting paid, you can stop that bleeding right away by letting us know, or letting them know, or letting an attorney know, letting somebody know you haven't been paid.
Yeah, because I do go out to each market every year, about every 3 or 4 months, and I do ask questions and I do look around, but I do not know what's underneath the rocks unless someone alerts me to that. So that is frustrating, but we are working on to make that a much better process in the future.
Yeah, hard to get control over a company you don't control. Yeah.
No, it is. It's a good point. Mm-hmm. And also to what you guys are talking about, another benefit of investing in a fund with a professional manager is that the fund manager does have control.
That's right.
Over the property managers, can do audits with the property managers, and the professional money manager themselves also do audits on themselves. And so everything's transparent. There's typically an annual audit. It goes with your annual statements, and you get to see all the financials of the fund and on all your assets. And so everything's really transparent. You usually don't have to worry about those items at that level. So it's an added layer of comfort.